this is the most unloved gold bull market that I've ever seen. And, the fundamentals have never been better, yet the investors, they've been burned so many times waiting for a gold rally that hasn't happened. Now they're like, okay, it's like the boy who cried wolf. It doesn't matter how good the numbers look. I'm not buying it, right? So it's going to take a huge rally in the price of gold to get people bullish. Now, fortunately, we're going to get a huge rally in the price of gold, and it's coming really soon. Also,
welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
Good day. We delve into a compelling development in the precious metals market that's capturing the attention of investors worldwide. Despite the gold bull market being one of the most overlooked in recent times, industry expert Peter Schiff insists that a major rally is imminent. Currently, gold and silver prices are navigating through a turbulent phase, retreating from earlier gains amid profit-taking and heightened uncertainty. Recent U.S. economic data, notably the weaker-than-expected July jobs report, initially propelled gold prices higher. The numbers showed a disappointing increase in non-farm payrolls and a tick-up in the unemployment rate, painting a picture of a softening labor market. Peter Schiff, CEO of Euro-Pacific Capital and a prominent gold advocate, remains undeterred. He's predicting a significant rally in gold prices that could shift the current investor sentiment dramatically. Schiff argues that despite today's pullback, gold's fundamentals have never been stronger, supported by a low interest rate environment and increased demand as a safe haven amid rising geopolitical tensions, particularly in the Middle East.
Gold did much better on the week, even though it was down today. I mean, at one point it was up, $24, $25. It looked like it was going to make another all-time record high. It was less than $10 away from a new all-time record high. And when it couldn't make a new all-time record high, it sold off. Now, I think that's temporary. I expect gold to hit a new all-time record high next week. We'll see if I'm right again, the way I was last week. But when gold turned around, and even though it was positive on the week, right, gold was up 2% on the week, and it was barely down today. It was only down a few dollars. I mean, it went up 20, down 20, and then it recovered, and it closed just slightly negative. So gold held up very, very well. But the gold stocks got clobbered today. Although earlier this morning, many of the big names that I own personally, that we own in the fund, Newmont Mining, Agnico Eagle Mining, Kinross, a few others, made new 52-week highs this morning. And then they ended up closing negative. I don't think these are significant or key reversals. I think you have a great opportunity to buy this dip in the gold stocks. In fact, given how much the stock market was down, they held up. And in fact, the gold stocks were not down as much as the NASDAQ today. Normally, or it has been recently on these big down days, when the NASDAQ gets killed, a lot of the gold stocks get killed even more. But the GDX was only down 2.2% on the day, and it still finished positive almost 1% on the week. So gold stocks are looking really good. I think they were a great buy today. In fact, I posted that on X that people should take advantage. We still don't have nearly enough bullishness on gold. It really is incredible. I looked at the earnings that came out a couple of days ago from Gold Money. I don't really have a position in the company anymore because I got rid of it to buy Schiff Gold back. But I did look at the earnings because they came out with better than expected earnings. Stock was up about 10% from a really beaten down level. And I wanted to know, well, why? Why were the earnings good? Because, the gold business, I have Schiff Gold. I mean, it was okay for us. And the reason they earned more money than people thought was because so many of their customers dumped their gold. They lost about 2% of the gold they had in custody. About $24 million worth of gold was sold by their customers, even though gold was up 4.5% on the quarter, which isn't bad. That annualizes out to 20%, yet their customers are selling their gold. Now, Gold Money makes a commission when they sell. So since there was a lot of selling, they made more commissions. But I mean, that's not what you really want to see. You want to see buying, because now you're getting new customers. They're sending more money. You get custody, storage fees. And when a customer buys, then that's a future sell commission that you can get. But when they sell, that doesn't guarantee a future buy because they take their money and they go someplace else. Now, it's possible some of the people that sold gold at Gold Money went and rebought it someplace else if they're just not satisfied with Gold Money. So it's hard to say for sure. But the fact that Gold Money isn't selling a lot of gold, the fact that Schiff Gold isn't selling a lot of gold. The fact that nobody is selling a lot of gold just shows you how ridiculous this is. This is the most unloved gold bull market that I've ever seen. And, the fundamentals have never been better, yet the investors, they've been burned so many times waiting for a gold rally that hasn't happened. Now they're like, okay, it's like the boy who cried wolf. It doesn't matter how good the numbers look. I'm not buying it, right? So it's going to take a huge rally in the price of gold to get people bullish. Now, fortunately, we're going to get a huge rally in the price of gold. And
Meanwhile, gold stocks saw a day of mixed performance. Although major companies briefly reached new 52-week highs, they ended the day lower. Schiff views this dip as an opportune moment for investors to buy into gold stocks, highlighting the potential for substantial gains as the market adjusts. Turning to broader economic concerns, recent weak economic data has intensified speculation about the Federal Reserve's next move. Market participants are increasingly betting on a substantial rate cut, with futures contracts showing a 70% probability of a half-point reduction in September. Schiff, however, suggests that the Fed may need to consider an emergency rate cut if market conditions worsen further, criticizing their past decision to lower rates to zero. Adding to the complexity, Schiff questions the reliability of the government's job creation estimates, particularly the birth-death model, which assumes a significant number of new jobs were created. He contends that this model might be overly optimistic, given the current economic landscape.
You had a week of weak economic data capped off by an even weaker jobs report. And now there's a lot of pressure on the Fed. Now a lot of people are talking about a 50 basis point rate cut in September. I was talking about it last week, and I thought they would do it potentially in July in the meeting we just had. I think they may end up having to do an emergency intra-meeting cut of 50 basis points, which they'll look like complete fools if they have to do that. So believe me, they don't want to. They want to wait until September, but they may not be able to if the markets keep tanking, right? So they're going to have to do something, but they're going to have to, try to find a way to sugarcoat it. But, they should have moved when I said, not because it was the right thing to do, but given that I know what they're trying to accomplish, they should have done it. They would have had, silenced some of their critics in the short run who don't really know enough to criticize them for the right thing anyway. Everybody thinks, the Fed waited too long to cut. No, they waited too long to hike. In fact, they never should have cut. They never should have put rates at zero, but they did. And now they're in a very difficult situation. Oh, and one more thing before I get to the Fed meeting on the jobs report that I meant to mention was on the birth-death model. Now, as I said, the government claimed that 114,000 jobs in total were created in July. But that also includes the assumed jobs from the birth-death model, right? Now, there's some debate as to exactly what one assumed job actually equals when it gets into the real numbers. I don't know that it's one for one. I'm not really sure. But I know it has a significant impact. Obviously, if they assume a lot of jobs were created, well, the number of jobs that they assumed were created by businesses that they guess were started up, right? They don't even know that these businesses exist. They're assuming that they were created. That birth-death model was 256,000 jobs created. That's a huge number relative to the total number that they claim were created. Does it make any sense that if the businesses that already exist are barely hiring anybody or are laying people off, that you'd have all these new companies starting up in the same month, hiring all these people? Makes no sense at all. Again, they still think, the statisticians, they all think the economy is great. And so they assume that new businesses started up. If they actually realized how weak the economy was, they would assume that existing businesses are closing down. And so the birth-death model would be showing jobs.
As we head towards the September Federal Open Market Committee meeting, expect heightened volatility and intense speculation. The unfolding economic scenario promises to keep investors on edge as they anticipate the Federal Reserve's next move. Stay tuned for more updates and analysis on these critical economic developments.